Hello everyone, Joseph Hastrader here with EWH University for Small Business, back with another quick business and tax tip for you. And what we're going to share with you in this video is what are the 5 main factors that determine your tax position or how much tax that you owe. So here they are, real quick recap, and then we'll give you an example. So first off, the first factor is what are your total earnings or your total income that you made for the year. Then from there, what the IRS allows you to do is to have certain deductions that you can take off of your earnings that'll arrive at the second factor, which is your adjusted gross income. Then once you have your adjusted gross income, they allow you to take your standardized or your itemized deduction, whichever is greater. Okay. Then once you take that, you get at something called your actual taxable income. This is the actual amount of income that is actually subject to income taxes. Okay. Then from there, you're going to take your tax rate based on the tax bracket that you're in. You're going to multiply your taxable income times your tax rate, and that's going to then arrive you at the amount of tax that you owe. And then the fifth and final factor then is tax credits. Tax credits are actually a dollar for reduction in the amount of taxes that you owe, which is different than a tax deduction, because a tax deduction simply reduces the amount of income that is subject to taxes, where the actual tax credit reduces the actual amount of taxes that you owe. Okay? So let's walk through a quick example to highlight some of these points. The first is, let's say somebody has earnings of $110, okay? And then from there again, the IRS allows you to make certain deductions that will arrive at your adjusted gross income. One of those, for instance, is contributing to a qualified retirement plan, right? And there's different plans out there. You want to know what those are, consult with a financial planner. But let's say they contribute $5 to a retirement plan. Okay, so they had $110 of earnings minus the $5 they contributed. They're going to get to an adjusted gross income then of $105. Okay, then from there they're going to take their standardized or itemized deduction, and let's say in this case it was $5. So they're going to have $105 of adjusted gross income minus the $5 for their standard or itemized deduction, and now they're going to get to taxable income of $100. Then let's say they pay 20% in taxes, so they take the tax rate of 20% times their taxable income of $100, and the tax that they're going to owe then is going to be $20. But now they also maybe might have some tax credits, like for instance, the child tax credit. So let's say the tax credits they have were $5. Well, they owed $20 in taxes, and again, the tax credits are a dollar for dollar reduction in your taxes owed. So in this case then, they would owe $15 in taxes at the end of the day. So again, the 5 factors that determine your tax position are your earnings, adjusted gross income, your deduction, standard or itemized, your tax rate or bracket that you're in, and then also your tax credits. Now, the other thing is, for the sake of this video, we also highly simplified how your tax rate actually works, or your tax bracket works. So join us for the video on what is a progressive tax system that'll walk you through actually how it's determined what tax bracket you're in, and then what percentage of your income is actually multiplied by a certain percentage, and you'll understand that more when you see that video, so you can understand how that portion works as well. So hopefully that helps you understand the 5 main factors that determine your tax position. Thank you for joining us for another quick business tip of the day.